The market had a little sell-off today. The VIX spiked back above 15, and I spent 168K on two specific stocks. Now, I'm gonna prep you for Tuesday's market open. I know the thumbnail said Monday, prep for Monday, but remember, Monday is closed for the holidays, so let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary, but let's take a look at the portfolio. As you can see, right now, the portfolio, I did do a 30K capital contribution. So I do that at the end of each month, and it ranges anywhere from 5K to upwards of 30K. So I did that, and that brought the portfolio up to 1.221 million. Okay, so if you do want to follow me on my 8-figure journey, be sure to hit that subscribe button down below this video. And if you get any value out of this video, please give me a thumbs up. I would highly appreciate that. So let's go ahead and dive into the realized gain loss. I'm going to give you a monthly summary. As you can see for the current month, I'll press the refresh button so you can see that. August, we did pretty decent. Okay, 34K. Obviously, results vary month to month, but this is about a 3% return on my portfolio for August. So that's how we did. We took a small loss on Tesla because I got my shares called away under my cost basis, but I made that up in previous months with covered call premium. So really that was kind of a break even for me. As you can see here in my private mastermind, we now have 330 clients in Options Trading University, all sharing their inspiration. Today, Grace shared her inspiration. Here, she closed out some NVIDIA puts. Mike closed out some Tesla positions right there. This client joined last month, and now he's doing pretty well there. As you can see, inspiration, and these results vary based off risk tolerance and account sizes. But if you do want access to my trades here in Ryan's Trades and my leaps, entries, and exits, I even show a portfolio that I don't show here on YouTube, then that's gonna be at the top of the description down below, so be sure to check that out. Also, I do give away free trade ideas here on my Instagram and my free newsletter, which are also both down below in the description. So be sure to be subscribed to both of those. All right, so let's talk about the markets first. Core inflation rose to 2.9% in July, and then core PCE came in today in line with expectations. So inflation is, staying steady. It's not going up, but it's not coming down at an exponential rate. We also had the end of the de minimis exemption. Okay, so this was what I believe to, kind of freak out the markets just a little bit, because what this exemption is basically it allows shipments valued under $800 to enter the country duty free, and that came to an end globally today. Okay, so that's definitely going to make an impact on goods that are priced lower than $800. There's going to be a one-time kind of rise in prices now, because now companies have to make up for that duty exemption. So that's going to be, obviously that's going to hit the markets a little bit there short term, which could lead to some volatility coming into September, which tends to be the most volatile month. Now let's look at the economic calendar. So for next week, we have a few things in line on the economic calendar. We have the US trade deficit, which is on Thursday, initial jobless claims, and then the unemployment rate, which is on Friday. So I actually think that we're going to see some volatility first week in September. I think it's going to be around this unemployment report. I think it's going to come in pretty bad. I think we're going to have some pretty bad unemployment as a forecast for the future. And what's going to happen is, yes, the market will initially have a pullback there because of short-term fear, right? But, okay, I do think that the September rate cut odds that are currently at 86%, we're looking at the CME FedWatch tool. Yes, we're getting a September rate cut, but the odds, I think, are going to go from 86% to upwards of 99% once that employment report comes in. Also, I do think that the potential for a bigger half basis point rate cut will probably, the odds will be favoring October. So I think that the rate cuts are going to be more aggressive once this employment rate report comes out, which is good for the markets, okay? And that tends to send the markets upwards because businesses can borrow at cheaper rates, consumers can borrow at cheaper rates, which causes more liquidity to flow into the markets, okay? So here's what I'm kind of projecting on QQQ short term. We're at 569 right now, down 1.28% by the time I'm filming this video. The markets close in about a couple hours. So I think that, there's two specific spots that we could hit here on QQQ by next Friday, okay? I do think that we might have some more downside pressure, which is great. There's some opportunity to be had. We hadn't seen VIX spike above 15 for the past couple of weeks. We've been kind of in the 14s, which is basically indicating that there's a lot of greed and confidence in the market. But I do think we could hit this, 559 level. Okay, that's kind of right where the lower Bollinger Band is, right here. If we break that, we're going to come down to 551, which I believe if we hit that, we will bounce pretty hard from there. Okay, and that would be a nice healthy correction from all-time highs of about 5.5%. So nothing too extreme. I don't think we're going to see some extremes on the downside. Sure, could we hit different levels? Yeah, let's kind of bring this out. I mean, we essentially could go all the way down to 544, which would be from all-time highs about almost a 7% pullback, and that wouldn't surprise me either. But I don't think that's going to happen. I think that these dips are getting bought up. So once we see that opportunity, maybe VIX spikes to 17, 18, 19, and that will be the opportunity for me to buy the dip or sell more cash secured puts. Okay, so that's kind of the downside projection. It's going to be anywhere from 559 to 551, but in the next few weeks, I do see that the 590 area will probably get hit. Okay, so this is kind of the longer term target, within the next 3 to 4 weeks, maybe at the end of September. So this is kind of that target there. But again, do expect some downside coming into September. The VIX did spike up to 1550 today, which provides for some opportunity and to allocate some cash. So that's exactly what I did. If we look at the VIX cash allocation levels, we're now between 15 and 20. So I could have 20 to 40% cash sitting on the sidelines or 60 to 80% invested. And that's exactly what I did. So I have about 17% cash right now. I put on some new positions. We'll kind of go over those. And then I did buy 2 specific stocks. I actually got assigned the shares. So I had to purchase 100 shares of each. And I'm going to show you exactly what I did. So let's go ahead and dive into that. Now, the first stock that I got assigned on was actually Hims, okay? So Hims has been one that has brought a lot of premiums in the portfolio. It's been very wild, but right now is, I believe, a good opportunity to kind of buy the dip, because once this thing starts getting some momentum, it tends to be very violent to the upside. So what I did in the portfolio, and let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm currently doing. For educational purposes only, results may vary. Now, if we jump into the portfolio, you'll see that I got assigned on 800 shares of Hims, okay? I had to buy the shares at $50 per share. We're currently trading at 43. And then I proceeded, okay, immediately to go out to the options chain, go out 14 days, and I went ahead and sold 8 covered calls against my shares. Now, why did I do that right now? Why didn't I wait for the stock to go up? Because I don't know if the stock's going to go up tomorrow, in the next 3 weeks. So I just want to make sure I'm collecting income on those shares. So what I did was I went to the 51 strike, $1 above my cost basis, so that I get, if the shares do go past that, I get 2% in appreciation, plus I get 1% in premiums in 14 days. Now, results vary based off of where the stock is trading. But that seemed like a pretty good play to me. So I sold 8 of those against my shares to collect about $53 per contract. Okay. Next, okay, is I'm going to get assigned on about 1,000 shares after the bell at the 50 strike. So these didn't get assigned for some reason today, but on Monday, or on Tuesday rather, I will have these in my portfolio, and I'll do the same thing. I'll go out 14 days and I'll go out to that 51 strike and sell those covered calls against my shares. So it's pretty cool because I'm going to collect income while waiting for the shares to go back up, and then hopefully I get the shares called away with some appreciation there as well. Okay, so, and I'll keep doing that every single week, just picking up more covered call income and potentially even rolling my, like if they expire worthless, I could maybe even go up to a higher strike and get more appreciation on the shares. Okay, but Hims right now is really good. In fact, I did add to my position this week. I sold 7 September 26 40 puts to collect $1,100. Obviously, results vary. But yeah, that seemed like a good play to me because there's a lot of support here at this 41 level. Okay. And so I went slightly below that at the 40 strike. HIMS is one of those where any good piece of news comes in and this thing, tends to propel to the upside. Now, we are trading on very low volume in HIMS. So that's exactly why I think, the people that are holding the shares are just holding and the sellers are kind of exhausted at this point. So if we could see an uptick in green volume, then this thing should head higher. So I think we're going to probably trade between this 41 area and this 47 area for at least another week until, maybe breaking out above and going towards that 52 area. Okay, so that's kind of what I see on him. So that is one stock that I purchased today. And that's going to total about $90,000 worth of shares on HIMS. Now, the next position I am getting assigned on today is going to be Meta. All right, so I'm getting assigned at the 745 strike price. So I'm going to have to purchase 100 shares. That's going to cost me $74,500. And I got paid $11.44 to buy those shares at a discount. Okay, so if we go over to Meta, all right, this is such an amazing way to do it. I love getting assigned on the cash secured puts because essentially I'm getting assigned right here, okay, slightly above where we're trading, right? But what I'm going to do is I'm not going to sell a covered call until I'm up a little bit, and then I'll sell a covered call that's at maybe the 780 or 790 strike, somewhere up here. So I get all this appreciation, plus I get to collect covered call income against my shares because I am very bullish on Meta. I think that by end of year we'll be somewhere in the mid 800s. Okay, so that's kind of my take on it. Again, low volume this week, super low volume. So this selling pressure isn't anything significant. It's just low volume selling. Okay, but if we go to the options chain, I'm going to show you exactly what I'm going to do. I'll probably go out 21 days, something like that, and sell the, we'll probably sell somewhere around the 780, maybe the 777 and a half, pick up $500. Results vary based off where the stock price is, but I like that trade, for, collecting some income while I'm waiting for my shares to appreciate. So that is going to be the trade there. Okay. Now, another big position that I adjusted today, this will be the last one, is NVIDIA. Okay. NVIDIA, I closed out all of my cash secured puts at the 170 strike that expired today. Okay. And I picked up a nice, 4K there, and I re-entered with a whole new position. So if we go here, you'll see now I have about 119K in cash secured puts. I had 160 going into earnings. So I sized down the position, but I did put on more. So I put on about 7 September 26, 170 cash secured puts. Okay. And if we go to the options chain, we'll kind of see how much we can collect there. I went right at the money, which is a 37 delta, very aggressive, 2.75% ROI. Results vary based off where the stock is at. But, I collected $450 per contract. So that seemed pretty good. Okay. And you could see my total premium collected, $3,130. And what's cool about that is if the stock does go down past 170, which is right here, okay, by expiration, I'll pick up those shares. And then again, I got a nice discount on those shares. So let's kind of look at the discount. The discount would be about a 7.5% discount on the shares from all-time highs. And long-term, I do think that we're going to hit 200 by the end of year on NVIDIA. Now, that's going to conclude today's video. If you enjoyed it, please give it a thumbs up, and I'll see you in the next update. Take care.